Let's look at over the wave count nightmare. Um, I don't know the fourth. I really don't want to make a case yet for the fourth wave, but hey, if we can run it, let's say if the 6059 is the top of the third wave off the lows, because you have to look at this. 3 versus 1, which is the ideal textbook print, is at 6,095. Now, if you notice that price here, okay, is starting to compress, getting really tired. And the last few days, if you notice that the volume, which is the most important part, it's not all of these highs that you see here, it's not being confirmed with the volume because it's just a grind up. This is like days of selling, the upside right there. It's just volume is not confirming this upside. Here it was, not this. You see like how the price is starting to trade. It's getting exhausted. Anyhow, if this third ends here in this zone, and if we're starting to make a case here for summer of wave four, 4 versus 3, 23.6, 38.2, we can pin this thing and run it at 4 versus 2. 61.8 and 100% is down here. So this is the retracement of wave 4. So your major support is this, which is 57.83. Why is that? Is this where you had a largest percentage decline? Okay. So every time when the price will make its way up, taking out this high, which is the resistance, you see it gapped up, make its way up, came back down, retest this zone, and then ever since, the price has been rallying to the upside. Sooner or later, the price will come back to retest this zone one more time. Now, if we make a case here for a fourth wave, how is this fourth is going to go? We simply don't know. Okay. This is not an easy wave to um, to label, first of all. And on top of it is just to thinking like it's a flat, zigzag, whatever, triangle. Who knows? Just don't know. I don't want to make a case of this yet because we don't have confirmation here or here. Okay. So now if we're looking at a price here, I'm just looking at a weekly basis. One standard deviation move, 57.85. Two standard deviation move at 55.60. I don't think that we're gonna make a three standard deviation move. That's gonna be extreme. So let's go off with a one standard deviation move, which is at 57.85. 57.85 is gonna put you right there that I was talking about. Okay. This would be the 5673, 5660 to 39. It's near this 5560. You see this 56 area toward this cloud line as well. This cloud line that's going on. So you basically what you're looking for here is one standard deviation move, two standard deviation move. That's what this band is. What you see here. This is exactly what I set it up here on the chart. I can get my fibs retracements. But those are like these standard deviation moves are based off the highs here anyways. So just fibs are just kind of gives you a little bit more, precise kind of prints. I don't know yet. So, but this is something that we need to be aware of that. And I've been saying this is coming. Okay. This is coming for summer. Is it already started? But now, or can we just make one more push back to the upside, then back off? Okay. Regardless what the case is, this is coming. That's all I can tell you. Now, this fourth wave right there is going to come into a play with this because because the fourth wave right there has a relationship with wave two because these are corrective waves. Okay, a counter trend move that moves against the trend wave. So the distance travel here of wave one, which was 6.92%. Okay, that was the measured move of a wave two, 6.92. Now you take this high to this 100% is 6.92. Okay, that's what we call 4 versus 2. Distance travel in wave 2 is exactly same distance travel in wave 4. That is always your minimum downside retracement. And then in between, you have 23.6 and 38.2. So how do you build two zones? This is your first zone. This is your second zone. So this is the area right there of this 100 and 150 points. You don't just initially just come all the way back down like this and just goes right back up. Fourth wave takes time. Okay. So now we can run times and stuff, but there's no point for me to do it yet because I'm just gonna leave it blank for now and think like, okay, yes, if this is 6059 is the top of the wave three, then we should start backing off, starting to see some downside in the coming weeks. Okay, and then from there we make our way back up toward this fifth wave against this invalidation. So now the fourth wave typical retracement is 23.6, 38.2, and 50%, which is 50, 55, 59. So whatever the case is, however the price is gonna come down, either it's gonna come down and depends how it is. Either it's gonna be a flat, is there gonna be a zigzag? Zigzag is like a 5 down, 3 up, another 5 down. Flat is like a 3, 3, and 5. Or we just basically make some sort of like a triangle, something like this. So this is your flat, and this is your zigzag. Or if this is going to be a complex, So you have one, two, three, four. Four with four. Yeah, good luck figuring out that. You just sit and assume like, okay, yeah, it's gonna be this. You just don't know. Fourth wave is not an easy wave. I can tell you that. It will torture the hell out of you. But we have this. I need this more than Elliot. Trust me. So we just follow the directions. As long as the direction is up, we're bullish. Direction is down, okay, well, it's down. It's not up. So we don't need to look anything up. When the direction of the swing is up, our job is only to project price to the upside. When the direction of the swing is down, we're only looking down, only looking for a retracement. Where is the potential support that we can find for the price to take a pause? There is absolutely no point to look for a price to the upside when the direction is down. It's really simple. You only look up when the direction is up. It tells you right from, it'll tell you exactly what the direction is. This is down now. Why is this? Because here's your outside bar, lower bar, lower bar. Now you got three down bars. Direction is turned down. So what does that mean now? So it took 3 days like this for swing to turn down. And now it's going to take 3 days for swing to turn back up. We're counting now, we need to count three higher bars. So when swing was down, there's one, there's two. This doesn't count because the lower bar. This is the third. Then this is a higher bar, another higher high right there. So I have to count three now to the upside. So this was down. This one has two down. If Monday, if we take out 421, 525.73, 59.63.21, all of these directions of the swing are going to turn down because now we're going to have because we already have two now. This one has already got three. This is already down. We can see it here. Not this part. Not these three of them. So these low right there is what we're gonna watch on Monday. Okay. Here is the 5 MA, 5 period M, which is 6,017, which was the price has been closing above this. You see this all green until yesterday turned red. Because now why? Because the price closed below the 5 MA. Same thing here is, but this is 2 days now. This is one. This is one. Okay. Starting to see the price is gonna take a bit of a pause because you see like you know Price was trading above the 5 MA for a long time until it rolls over, swing turned down, and then after 3 days or so, it made its way back up. But the basically just simply take 5 period moving average and to see if the close is either up, above the 5 MA or is it up below the 5 MA. So yesterday close was below the 5 MA. So we're gonna watch these lows on diamonds. One standard deviation move yesterday was 525, 525.98. The low was 525.73. S&P one standard deviation move was 59.64. The low was 59.63.21. So tell me that we don't know how to analyze price. So we had a pretty, so we know what would be the expected moves are. The next standard deviation move is 58.94. Okay, it's right here. And this one is 518. This one still got a break. So this one is a 415. Your 200 EMA on diamonds is at 417. So I don't know what is going to happen with this war because looking at all these news and stuff, it doesn't look like that it's going to end anytime soon. So now all the tariffs are gone. Nobody even mentioned tariffs yesterday. Now the risk shifts to oil. The spike in oil can raise price. Well, definitely the price is going to go up. Energy prices goes up. That could trigger, inflation. It's the same thing happened. Remember, when Russia attacked Ukraine, oil prices shot up, went up almost 35%, and how inflation went up. And they controlled it over time. Yeah, you don't want higher oil prices. The average energy prices are pretty so very everybody watches higher energy prices is not good. But is it because you have to look at this that Iran produces 20 million barrel per day. That's a lot. There's a lot. I mean, now they have to either raise production, right? It's all about supply demand, right? So now it depends on Saudi Arabia to the central bank, OPEC, if they can raise production to cover the um, difference of Iran. So that's what we're gonna find out. I don't know when the next OPEC meeting is gonna be and how long. Well, we don't know how long this thing is gonna last. And according to the news and stuff, they're saying that they because yesterday I was watching news and they're saying like, okay, Israel attacking their military bases and their nuclear plant, whatever the you know uh, places are, but in return, Iran just blindly firing all these long-range ballistic missiles, and they just landing on people's head. So it's just, I don't know if this thing's gonna escalate into something big. We don't know if there's any other country can become a part. We don't know that. It's very hard to, we're not a war experts. We don't know how these military operations and what, you know, but we just keep supplying Israel with all these weapons, give them all the support they want. That's it. And they just wants to make sure that they're well protected by the US and no other country is gonna touch them. That's it. If any country is gonna touch them, it means that now you're messing with the United States. Yeah, of course they do. All of these companies that they make weapons, they love it. That's what they want. People fighting, and our weapons are keep selling. This is Look, this war is not like a ground operation. It's just an air attacks. You're not gonna you're not gonna see Israel forces are landing in Iran. I mean, it's just or Iran forces are. Well, how are you gonna get there? How are you gonna get to Iran? You have to go through Pakistan. You think Pakistan is gonna allow Israel to cross their border to get to Iran? Pakistan is another enemy of Israel. It's just these are the countries that they don't. I mean, I hate to sound Paul, but we gotta have to know a bit of our history. These are the countries that they don't accept Israel. They have no diplomatic relationships. Pretty much the entire Middle East. There's no consulates over there that you could a citizen of uh, of a Pakistani can go to Israel. No, their passport, like if you have the Pakistani passport, and if you go to a very last page of the book, it says right on the bottom that this passport is not valid in Israel because there's no diplomatic relationship. So how are you gonna get a visa to go there? So it is accepted anywhere in the world except for Israel. Yeah, of course, you have to. United States has to defend Israel. There's just no debate about it. It's just the way it's the fact. Okay, just it's our taxpayer dollars to just gonna get burned. On top of it, if he wants to risk lives, that's another thing. Every weapons that Israel's using is made in the United States. Remember what Trump was tweeting yesterday? It's all ours. So they're testing these because you see the thing is this that when you make something, it's like for me, I can sit here, write a script, okay, of a price and put some conditions on them. And then here's my sell signal, right? And I put a bunch of conditions on them and I just put them on a chart. So when it triggers, well, I need to see the results. So it's the same thing when you back test them. So it's the same thing when these weapons are being made. They do test them, but they just test them in open field, right? That yeah, it has a certain range. It can cover this much radius. It has this and this and this, right? And how fast it can travel, the target and this and this, right? So you can do all this on open field. But the real test that comes in the real combat, see, making these fifth generation, sixth generation planes, yeah, they're great. China has it, France has it, all these countries that they make these planes and they sell them to the other countries that's how that's how they're run their economy. So all the United States, they build everything pretty much, and then they sell it to the rest of the world. Saudi Arabia and all these Middle East, all these countries, they all wants to buy U.S. weapons because they're one of the best in the world. But having them is a one thing, but when you actually test them in a real combat, that's where you have the real test against the one that they have. That's how your demand is gonna go up. It's gonna shoot up because they know like okay yes now because they're not testing if you make a fifth generation plane and then you have a sixth generation plane you're gonna spend millions and millions of dollars to make two planes and then you're gonna put both two to test. Well, who are you gonna put them in there? Somebody has to fly it, right? Well, you're gonna so that's where the real test comes into a play. So it's a lot of time when this happens. We see all these, all these ballistic missiles and this that they're fighting right now. They're collecting the data, so they fired. Okay, how long it took because the data is being recorded. They know that now they know exactly what the range is. They know like okay, does it get exploded? Is it get reached to the exact target? What the point was? What was the full radius? Like how much was the explode? How big was the explosion? Was this and this? So it's all get monitored as soon as you launch something. Your data is just given, and you have the satellites and everything. It's just that's just once you have and you collect all the data, now you know like okay, fine, now you finally tested this thing in a real combat, you know what it is. Then you take the data, then you take that and then you try to sell it to the rest of the world, make money. What's that? So very yeah, killing other people. I don't understand. I mean, I don't I don't know why there's so much hate. Just don't get it. You know, everybody just wants to kill another person. I don't know. It's just so bad. I mean, I don't look. Here's the thing, okay? I understand. I don't care. You're a Jewish. You're Indian. You're American. You're whatever race, religion you are. I do not care. Okay, you're a human being. Be nice. Okay, there are differences. You might like something, that is fine. We can compromise, we can meet somewhere, but that doesn't mean that I have to kill you because you're a Christian or you are some different race or different religion. What nonsense is this? We're all human beings. We all have one life, as a very short life to live in this world, but just it's just the hate, control, power, just it just makes you really mad and sad, and just that like growing up and you raising a child out of, and family and some bomb came like blow up your on, over your head. It just like, it's just like because of their political decisions that they're making because they cannot agree on something, and no other, like, they don't want to bend their knees in front of them. Israel has atom bomb because of United States, but Iran cannot have it. But they get to decide that they cannot have it. They will never have it. So why don't you tell this thing to Pakistan? They're the Muslim country in the world. They're the only Muslim country in the world has a nuclear power. There's only 9 countries in the world has it. So this is the only Muslim country in the world who has the nuclear. Why don't you tell them they cannot have it? They have more than Israel. That's such a massive stockpile. It's just like you see, like this kind of a dictatorship, like it's a sovereign country. They have full right. They can have whatever they want. But no, they cannot have it. It's just politics, man. It's just power and money. It's just yesterday. This, yeah, I mean, I was pissed. I'm not gonna lie. You know, one country made a move, shot oil up like almost 12, 13, 15% overnight, tanked the market because of one country. Because they decided that no, they cannot have this. We're just gonna blow everything up. It just it's like risk is like upside down because of this. It just makes you mad. Like why, we're getting punished for it. Israel is what? California economy is larger than freaking Israel. What kind of an impact they have on the global stage when it comes to their economy? Like, how can you even compare Israel economy to the rest of the world? They're there, but it's not as huge that could make like, oh yeah, I mean, it's gonna make a massive impact on the global. But it's just because they're just going after a country who has oil, the country that is they're producing 20 million barrel per day, you know? So we don't know what their common ground is, and we don't know that. They just only tell you what we wants to hear. And according to Trump yesterday, that they gave him plenty of time to make a deal. And I don't know. There's all I know is that Iran says like, okay, we will stop our nuclear project if you lift up all the sanctions. So what are the conditions? Well, we don't know that. So U.S. lift all sanctions and they stop, um, making uranium. So what kind of a deal they have to make? Well, we don't know that. So if U.S. lifts all the sanctions from Iran, that gives Iran an open market now to sell their oil to the whole world. That will boost their economy, and now they're just being punished. And in return, they are the enemy of Israel, and you know, they just literally saying we just want to wipe off Israel from the world map. If a president was telling me, well, what is this? You've given another country an open threat. We just want to wipe you off on the world from the world map. That's their president said. That's why Israel is so scared that if they're gonna get a nuclear bomb, well, it's coming our way. And we'll be done. Uh, but these kind of a things impact prices, and we all get punished for it. So this dip from, well, we opened lower from 6,026 down to 5,963 is was all of yesterday impact. I mean, it as in this is not the first, this is not the last. There had many, this thing has been going on for many years. We had the same thing last year as well, I believe. That they would start fighting, back in the Israel do the airstrikes. They take targets, send the planes out, hit the targets, and just go back. Iran just shoots long range missiles to them. That's it. That's gonna be this. Well, I don't know how else you can, you know, because you have to look at like where you have to launch them, like where how far those can go. They can only go to a certain distance. That's it. You can't shoot something from Iran. Is you think that's gonna come to the United States? Well, how is it gonna make it here? So you have to, you know, cross the entire ocean. Oh yeah, that thing is flying. Oh, so, anyways, it's just crazy, man. Just literally crazy, you know? Like, it just enjoy life, so short and God, you just can wake up and just want to blow somebody's head off. Just gonna make you happy. That's it. Um, if you look at the world population, it's decreasing. I was reading about the other day. Japan fertility rate is so bad right now. Like, I don't know what's going on over there. Japanese people are like, what, they're one of the healthiest, the diet they have, the best food, everything. I just not here. Like United States is full of Chicago especially. Jeez, it's just too many fat people. I don't want to be rude, but it's just what it is. Eating junk and all this, and they just, yeah, Japan fertility rate is really bad, really, really bad. They don't want to make any babies. Um, Back to the wave count. I mean, we can leave this fine. The only other thing, if we gotta have to open this thing more, I mean, this, keep in mind, the third can go, can travel even more, can go up higher. The other thing we can do is, I really, I thought about kind of like changing this. It's just gonna, like, we can definitely open more upside. There's no problem. But the thing is, this is like, it's, you see right there, this correction here and this correction here. So if you put 1, 2 here, so you take 5 all the way up like this, and then you have to go 1, 2, smaller 1, 2. But then you see, this is a challenge, but because the third wave here doesn't go like this, third, like, is always gonna have, it's gonna travel like this with a lot of acceleration gaps. So I thought about it, but I was like, nah, I'm just not gonna make a funny looking wave count. The wave count has to make sense. This is right. The only thing we can do is is for me to make this thing as a triangle. That's what I had it before. Remember, we posted this thing on Twitter as well. For this 4 here, we can do this part like this as well. Move this 4 here. And then from here, if you want to do this, then you have to take 1, 2, 3, 4, and 5. Now you can make a diagonal case here as well. We can do that as well. Okay. So that's going to be fine. Instead of leaving the fourth wave here, which I did it here, as if you notice, I actually retweeted this thing just to give some of these. This one. Um, See if we put a 4 here, and then you can just kind of like count this thing up to the, toward this fib zone. This is a zone right there. Yeah, 127 extension, 161.8, and 200% with 3 versus 1, this is a massive resistance zone. Okay, these are very strong fibs. So now if you take this, it's the same right there. 127, 161.8, there. So from here, so now on the other count, I have 4. This orange 4 is been sitting here. So then from here, I'm just counting this thing as a diagonal. But if we make this thing as a triangle, land a fourth wave here, which is totally fine. And then from here, you can just see if we can make our way back up toward this 161.8. Now here's a question. So if we back to the Q's are already there from the low. So the 3 versus 1 on the Q's is 530. But on the S&P, it's 6,095. How close it was? 6,059. So shy by few points, okay, of this 161.8. Is it really gonna hit? We're really gonna get a textbook print? Well, it's possible, or that's it. So this is why I've been saying that this is coming. This is good. It's is I don't know how you like, but I need this confirmation from here to make the case for that. So it's gonna take time. So there's nothing I can. Calling a fourth wave is not easy, and projecting the fourth wave is not easy either. So you see, like, so I was like, okay, if I go with the diagonal here, I have to do the same thing here as well. So I did the same exact thing here as well. So now from here, this is the case here for the fourth wave. Well, how deep is it going to retrace? Well, we don't know that. Okay. This is the all-time high, which is 540. Now the question is here is, can we do, if this is a 1, 2, can we do 1, 2? What do we don't have? You see, no, it's just not going to make sense, because if if we have 5 up, 3 down, and then we go with a smaller 1, 2, 3, because you cannot put 3 here now. It's going to be very tiny. 4, 5 to make a 3, and then we look for this fourth wave. Then we get this 5 of this 3. Then we'll look for the fourth wave. It's possible, but we'll see. I mean, there's another way we can make this thing work. It's just to get more upside. I mean, let's- let me do it this way. Let me show you. Save this. I don't want to lose this one. Let me open another one. Yeah, copy this. But damn, why didn't I copy? You have to name it this way. Okay. Okay, there you go. Copy the whole thing. So I have my original here. Now I can make changes on this part. Get rid of this. We can just kind of, all we're trying to do is just trying to give this third a push to new highs to see if this could work like this. Okay. We can make this thing work as well. So here is, so we take 5, 3, and then we count another 5, decompose this, something like this, you see? Now we take, make this thing, see, like this. So you got your third wave here. Here's your fourth wave, 504. Now from here, you can count this thing as a diagonal. This is a diagonal, that's for sure. There's no other way because it's the way the price is. Now we'll look for this fourth wave against this two. So let's run retracement on this one. 4 versus 2, 100%, 522, and pin it. There you go. So this is your fourth wave that could work here. And then from here, because here's our zone to the upside for this 3 versus 2. So now this fourth wave right there, we don't want to get too big. It just needs to stay something in this kind of a look, in this kind of a look right there. Like this. And it goes sideways, whatever, chop around and stuff, you know. And then from here, you get one more push back to the new highs. And then you look for this fourth wave. That would go against the second wave right there. So regardless what the outcome will be, this is coming. So you all have to be ready for it. Okay? This torture right there is coming. So we could track both ways. I can just leave it like this. On this one, we can name this thing as alternate 1 hour. And we can do this one primary 1 hour. There you go. So we can just do it this way. So now we have this, meaning that the third ended here. That would make the case that fourth is going to be the next wave, the higher degree fourth wave. or we look for smaller degree fourth wave to see if we can get one more push back up to the new highs. And then from there, we look for the minor degree, because this one right there is your minute right there. It's a minute degree. Then you have minor degree. So 5 minute makes one higher degree. So you have 1, 2, 3, 4, 5. 5 minute makes one higher degree, which of minor, which is 4. So then the fourth minor will come next. Okay. Because it's very like difficult to make the case because we've been rallying for 9 straight weeks now. Well, we have to take a pause somewhere, right? Or we're 9 straight weeks. We haven't had a single lower weekly bar. That's what 4 weeks is one month. We're talking 2 months and 1 week of a price that has not even made a one single lower bar. Sorry, put a lower weekly bar. Every single one of them is either green outside bar or one inside week. This is what I posted this thing yesterday as well. If you notice, this this 59 6,000 level, it's a very just gonna draw this. I had him yesterday. I don't know what happened. It's 5,900 and 6,000. Watch this here. This. You see how many times the price has consolidated here in this area? Nowhere else except here. Look, 59, 6,000 down, up and down, up all this time. Look how many times the swings have. This is why when you put this, now watch this. You see how many times the swing has went back and forth in this area? Watch this. This is what I'm saying. This 100 points here from 59 6,000 is gonna, because the thing is this, right? Every bull guy right now, even most of us, like, wants to see a new all-time high because it was so close. Okay? What do we want? Is this. So when you take out this resistance, the liquidity zone, okay? Now watch this. This is the all-time high. Watch this high right there. Just take these swings, and this is what the swing trading is so beautiful. Why is this? Is because you have 4.5% dip off this high. Oh, this is one kind of sideways. This is another one here. You see, there is some serious liquidity sitting up here. And look what happened last time. What do you think the price was doing here for over a quarter. Look at the dates here now. This level right there that I'm trying to show you, this 100-point range, we spent the entire quarter here last year, back and forth, because we're up almost, 20% year to date. So if you go back, this is 2025, we started here, this right here, January 2nd, right there. So this is where we started the year. Right here. What's going on? Right here in this line. So all the upside that we got for this year is this, and then this. And now it took 9 weeks that we've just been rallying back to the upside. Now the war triggered. The thing is, this is like from here, this is a lot of stops gonna trigger here. It's a massive liquidity zone sitting up here up on the top. Now let's take a look at how the V shape plays out has played before. Let's go back to COVID. Here, COVID drop, market recovered all the way back here, down 8.3%. So what I was trying to calculate for the last few days, I'm just trying to find V-shape reversals. Now this one was off by 4.7%. Okay. And now this one is by 2.5. 1.43. It's very, very close. So if we go back here, all you're trying to do is just you're trying to match price patterns. Okay. So now if that was the case there, so this was the peak. Remove this. So now this was the peak right there. And if you look what happens here. When you make your way back up on a V shape, you make a room to the upside, but you come back down and retest it. You see what happens? Look, how many days? Now you watch, take this, oops. Now you take this high and mark the low of this. See? Like almost 300 point window in the range right there. Then from there, you make your way back up. Your V shape is always gonna, because you took such a huge dip to the downside, you made your way back up. It's just look at the how many times the price came so close, you see, made an all-time high. Look at the close. I'm telling you, there's just the minute you're gonna hit that high, that's where a lot of stops gets triggered. Look at the high right there. Look at the close. This is the outside bar. Yeah, there you go. Double. Look at this. You always watch the all-time highs. Very tricky. A lot of people think like, yo, we're just gonna slice through it. I don't think so. A lot happens. It's just at that print, you know, because right now that every bullish guy right now is targeting this print to the upside. It's 61.47. So from 61.47, then you have to make your, I don't know. I mean, to me, just remember, I don't want to be sound negative in this. I just don't see this year it's gonna go into a double digit. Just don't see it. I just, I watch a lot of stuff you guys don't know, but I just, as much I analyze market every day, I just don't. It's just if I put everything together, looking at 2023, 2024, where we are now, we're like halfway through the month, halfway through the year. I just don't see a double digit uh, print for S&P this year. I just don't. I just kind of, if I have to make a call how S&P will close this year, I would say like within 5% of the year. So S&P can manage to print or just close right there, 2-3%. It'll get the upside, but it'll just eventually will fade. It'll be a flat year. That's how I see it. I get me wrong, but I think this market will run when it will have the clear tariffs in place. Um, his bill, when he's gonna, if he's he's gonna cut taxes, that will boost, all I'm talking about corporate taxes. What he did in his last term, tariffs. This is what it's gonna be. Yeah, and then he's attacking Fed every single day for them to cut rates. So these are when they're starting to click. So inflation has to come down. Fed has to cut rates. He has to give a break to all these corporate with taxes and the tariffs. So these are the four main bullet points that if he come across, and because he's in the office now for a little over 6 months now, so he is still have 3.5 years to go. So whatever transition and whatever that he is doing, that's what I think the market is buying time now after running for a while for 2 years in a row. So it doesn't mean the market doesn't have upside. It does, but it's gonna be like a grind up because we're just coming right back to pretty um mm, the all to near the all-time high. It's just to make our way back up. Sure, we can, but yeah, we're gonna come back down to retest them anyways. So it's tough to make a case. We just don't even have. We're sitting at what 1-2% right now. We just simply measure this. You can expect a 6,600 print, whatever. I mean, sure, but this is why most people have their 6,500 target, which is up here. It's roughly 8.5% upside from here. But no, I wouldn't even think or even waste my time thinking about double-digit growth this year. No. After all these things that I just mentioned, those four bullet points, yes, if they are in place, the market will see, yeah, because a lot of companies will take a big uh, advantage of the tax cuts. Yeah, that would boost their earnings for sure. Right now, market is S&P sitting at 20, trading at 21 times earnings. So it's not cheap market. It was cheap. So it doesn't matter. I don't understand about this ex, this expensive and cheap market. So it was here. So we're just gonna stay here. I know those earnings have the price. That adjust over time. Like same thing. Same thing with stocks. But that doesn't mean that just gonna what the stock just gonna sit there and we're never gonna move back up. It's just a very statement really doesn't make any sense. Isn't expensive. Okay, fine. So now you got the mean reversion. So okay, now it's good. So what does that mean? That we just never gonna go back up? Of course we will. That's a pretty nasty reversal. That's for sure. It killed a lot of people here in February and March, you know. But how this market has recovered in 9 weeks is just pretty damn impressive. Some dips are painful because they take forever to go up. But the market that we're in, especially with this guy, yeah, mm, that's it. This is a chart I show you every single week, you know, every single week. We look at this chart. So we can keep track of this, and if this is the case, we need to draw a channel now. That's it. So this will confirm either this four will hold to make the push back to the upside. And if this channel from 1 to 3 to 2 to 4, meaning, breaks like this, then you come to this one. Okay. So this is what we're gonna watch. So you make this is how you keep two counts um, side by side. And you will know for sure which one is gonna be right because they both cannot be wrong at the same time. Okay. Like this. So this 4 versus 2, 422, 418. So this little pocket right there is where the fourth will find support here. And then from there you look for this one final push in a fifth wave off this third. And then this fourth wave. And if it gets starting to get a deeper retracement, well, we have it. Okay. So regardless what the case is, you have to be mentally ready that this is coming and it's not gonna be easy. This is not easy wave to trade, especially the wave four, because it has such a huge run, so much acceleration gaps on the way up. It's just when the price will start to take a bit of a break. It's just when everybody will be chasing the high as of, the all-time high right there. Yeah, now you're just wasting that time, especially that options. So just want to give you, I mean, I don't, I know some people take a little bit more personal and they get really excited, like mad over it, like why my trades are not working and this and that. Well, you have to look at the overall market. One individual stock is not gonna move on his own. S&P 500 is a market capitalization index. Okay? It's not a price index. It's not a volume index. It's the market capitalization index. S&P it's basically is the market. There's no VWAPs on S&P 500. There's no volume on S&P 500. It's just never been. You know, I've been trying, but one day the VWAP can work, but there's no point for it. I mean, just not, just, if you cannot do it, you cannot do it. You know, SPY you can, but not the S&P cash index. It's not a price or volume index. That's all. Tesla made his way up. This is not the most attractive or the best wave count that I will personally call it. Okay. But we just gotta have to make the exceptions. There's no other way. Okay. The low is 214. From the low from 214, this is a three-way move. There is no such trend moves in the three waves in wave one. You need 5 waves. Okay, and there is no fourth wave here anywhere that you can label. I saw a guy who put a 1 here and make this as a 2 here. If you do this kind of an Elliott wave, you shouldn't be even doing Elliott wave. Period. I really don't want to be rude to anyone, but it's just I don't understand the logic, but this is your wave one and this is your wave two, and then you're looking for this. And then here you have third wave is even smaller than the wave one. But this is the wave count if you think is the way to go. Here's your wave one and here's your wave two. Well, sometimes you sell the BS, people buy it, I guess. Making a case here for a diagonal. The only difference here, okay, of a diagonal is the 3 satisfies the wave 1, okay, as the ABC. Then you have an ABC down in 2, which is fine. Not the wave 5. The wave 5 is supposed to stay smaller than wave 3, okay? So the 3 versus 1, you have wave 1, 2, 3, okay? Third cannot be the shortest wave, remember? Then you had a 4 with an overlap with wave 1, and you have the wave 5. The fifth wave right there in the leading diagonal must stay below 100% of wave 3. In this case right there, the wave 5 is the longest wave compared to 4, compared to 3, compared to 2, compared to 1, right? But not as much. So the invalidation here, according to Proctor and Frost, Elliott, to their book, is 358. The high was 367. Okay. So, yes, if I apply a rule to a diagonal, does this invalidate a diagonal? Yes, it does. But is there any other way to count this thing to the upside? No, you cannot. Okay. If I really want to make this thing work, I can. You can just do it this way. Instead of this, you put 1 here. If you do this, that satisfies. Then there's nothing wrong with the diagonal. Then what you have to do is you have to make this thing as a flat, like this. Now it satisfies your diagonal if somebody trying to scream at you, thinking that this is not valid, this and that, because there's some experts who has never posted a single chart on their own page with those, especially I'm not, again, don't get me wrong, I'm just trying to make a point that people who have 20 followers who has never posted a single chart on their own page, but they know everything about Elliott wave. They know every single rule. They know every single thing about Elliott wave. But they have never posted a chart, but they know Elliott. So if we do this, it works. If you put this 5 here, you have to give yourself, call it a conception. You have to just say like, okay, yes, I'm breaking the rule by 8 points by making a fifth wave the longest wave in the entire motive wave. Okay. So if you do this, it's fine. Now the fifth wave is not the longest wave compared to 4, 3, 2, and 1. Okay. So it really doesn't make that big of a difference, So the 8 points that you're trying to fight here by making sure that you're not breaking any rules and this and that, it's not going to make that big of a huge difference to the upside because you're trying to project something that you're 3 versus 1 to the upside, if that will come, if that's how the wave count will go. So if you're going to put the 1 here, the 3 versus 1 to the upside compared to here, it's just going to be off by the same exact points, what you're leaving it here. So if you have 355 versus 370, that will be the same difference that will make back to going to the upside. So, yes, I mean, rules are rules, yes, but at the same time, this diagonal just has a very huge debate in the Elliott world because the guy who wrote Elliott back in the 30s has never mentioned leading and ending diagonals in his research until the 70s. That's the history of this, which is just what those most people don't know. Is this when Bob Proctor and Frost put this rules on this leading and mode and leading diagonals and ending diagonals. He went over 5 motive waves, corrective waves, flat, zigzag, complex. So he went through all that. But he didn't, he just left diagonals and he died. So after that many years, they picked it up. They starting to notice like, okay, yes, when there is a 5 impulsive waves or if then there's a downtrend, you don't clearly most of the time get 5 clear waves up to the upside. There is a lot of time that the price makes a leading diagonal off the lows. That gives you a 3-way move down as a counter trend move, and then from there you look for another 5 wave to the upside. So it really doesn't matter. But now looking at this, how okay, if this is a 5, either you put it here, either you put it here, it really doesn't matter. If this is a 3, now we need another 5. Okay, so the low is 214. Now where we at? So this is a 5, this is a 3. Now we need to count 5 smaller waves to make this one smaller degree 1. So we have wave 1, down in 2, up in 3. Here's this 4th wave yesterday. So the low was 313. And now we're just trying to see if we can get this push right there to complete the smaller fifth wave of one. Then you're going to take a setback here in wave two. Now we have this trend line sitting on our head of the highs. All-time high is 488. So you got to take this high, and this is where we have the largest percentage decline that we just had, right? Now you take this high, connect with this is going to be your trend line resistance. So now we're going to go back here, zoom it out a little bit. Now we're going to have to see if we can get 5 waves up first. So now in this case right there, so 1, 2, 3, 4. We need to get one more push here in fifth. Then we need to take another setback here in 2. Remember, we need 5, then 3 down. Then we need this fourth, the third wave to the upside. Most of the time, the trend line resistance breaks on a third wave, or it can break on a fifth wave. It never breaks on a corrective wave, meaning the wave 2 and wave 4 never breaks trend line. Motive wave breaks the trend lines resistance. Okay, especially the third wave. Because this third wave is the most powerful wave. This is the one that is going to move really fast. You know, like this. You see how directional it is, quick it moves. It doesn't really give you any chance to get in. You in, you in. You not. Well, good luck. It just rips. All these thirds. You see. So I mean, we're right here. The upside 330, 335. Remember this. 332. So 332 is right around here. So from here, 330, 335, 341, 127 extension, and then 350, 161.8. 5 versus 1, which is the distance travel here off the low, from the low of 313. From 313, 5 versus 1 is right at 350 mark. At 350, then you're going to have this trend line resistance come in, okay? And 345, 345 is 78.6 retracement as well. What is that one? Yeah, it's a 78.6. 127 here. There's some serious resistance zone sitting here. Okay. So we can go back up and retest it, or just make this one with a one little push here, then take a setback, okay, in wave two, and then make our way back to the upside. But we don't know that yet. So in this case, so clean, a little bit messy here. So if we do this, now from we do 5 versus 1 is at 350. This one, yeah. So you can just build a 340, 350 zone to the upside for this fifth wave to get that push. And then from there, you get the 3 wave pullback, something like this. And then from there, you make our way up to just to break this trend line. Okay. So there's some upside, but there's a dip as well. So that's not wild. But it works really good with fibs though. If you got the right wave count in your hand, you can you can nail these lows and stuff almost to the penny. Very good fib stock. There there are certain stocks that I really like when it comes to fibs. You know, especially futures. Futures works really good. Bitcoin, oh, Bitcoin, the ES, MES, doesn't matter whichever you trade. Um, Meta, Palantir, Tesla, ServiceNow, MongoDB. Like these stocks that I'm telling, they're NVIDIA. Absolutely. NVIDIA works really good. Microsoft works really good. Not as great as NVIDIA, but NVIDIA is just the top of the line. Um, Tesla, there's several more. I just gotta have to look through the list because I run them, and then over the years that I know that which one is the Google is really good as well. Google is good. Meta is very good. But if I would have to rank the one on the very top is Nvidia. It's just after futures, you know. Future market, yes, but Nvidia is just this sucker is just gonna give you ups and bottoms almost to the penny. Um, AMD is okay. Just going through Broadcom, very good, very good stock to work with fibs. You know, just they respect their certain like when you reach those especially the certain fibs, it just gets it almost to the penny. They're just gonna make a rebound. You know, like these are the names that I'm in. Been Shopify is good. Um, Palantir is very good as well. Um, Eli Lilly on a healthcare, yes, but not as that big. Costco is okay. Home Depot is fine. McDonald's is good. XOM is the stock has been pretty range bound. So I have my few of my these stock. Uber is good. Yeah, Uber is very good. Yeah, Broadcom. We'll take a look in a second. So let me finish here first. So this is so so we'll see. So this is you know, we just gotta have to see how this fourth comes into a play to see get this push back to the upside. And then from there, some sort of this setback. And then I don't know if there's a robotaxi news or whatever that is coming that is gonna be the breakout or sell the news event. Like as always, most of these events are fully priced in ahead of time. Anyways, so everybody knows about the robotaxi. It's just a matter of like when they're gonna release it. So it's nothing like a big surprise. Everybody knew that. People's been, you know, tracking this event for a very long time. It's just a matter of just you know, starting to get into a play. So this is the case from here. Now go to the bigger picture. I have two ways. Okay. This is an extremely bullish case, right? So off the lows, here's your one down in two, and then we'll just look for this third wave. By doing this, that's third wave is you have one, two, up and three, which is three versus one. make this entire thing as a triangulation here, put a wave 4 here, okay? And now if you had a wave 4 here, you come now you made a new high, just the new meaning that you made a new higher high, right? So this goes your wave 1, that's your wave 2, and now you're looking for a third of a third. It's a very aggressive wave count. Okay. If I put fundamentals of Tesla on top of this, it doesn't click. Okay. It just doesn't work. 40% slow growth, 40% decline in sales. It just the overall picture is just, but again, it's Tesla. Once it goes, it goes. There's no turning back for this stock. So if this is the case, meaning that, I mean, there's not, I mean, the wave count is totally fine. It's just the one, two, three, four. We're looking for a fifth wave. So within this five, we're going to count five smaller waves. Okay. So we count this as a one, down in two. And now we're looking for one, two, three, four, five. So in this case right there, first target zone, same 409, all-time high, which is 488. So the 100% meaning that the distance traveled from this low where the four triangulation was ended, 1 to 100 is 575. So there's a lot of fibs here. These are all projections from different lows that I laid it out here. Okay. So I even put a time there as well, just to kind of to see, but it's not easy to calculate time up there on the top by December 7th of 2025, you know, the price of that 575. I mean, doable, it can happen, but it might not happen, but we'll see what happens. So if this is the case, but no, like earnings, no guidance, decline sales, but I know it's just fundamental. It just doesn't click with this outcome at all. Okay. Now, this is one case. Second is if we will move this four down here, now we have to make a case of a diagonal. Okay. So the only difference here is this. By keeping a triangle here. And then you lift them up as a 1, 2, 1, 2. You go up from here. Oh, no, I know this stock is wild. Okay. So it's the same thing here. So now keeping this fourth wave at the low, this one right there makes a lot of sense as well. Okay. So this has one ABC up, ABC down, ABC up in three, ABC down in four. Now you look for another ABC up in three to complete five for five. So starting the same thing off the lows. A1 down in two, up in three, four, and this is your fifth wave. So that will complete your five waves. So this fifth wave right there, okay, is the same as motive wave as this. This part right there is a bit more aggressive. So the people whose has that the company will be 3 trillion or a 4 trillion market cap. I mean, I know I think if I'm not mistaken, I think 283, 283, 84, 85-ish, kind of this range is what keeps the market cap of Tesla into 1 trillion. I think it's like 280, 283 or something, somewhere around. It's a few numbers all up and down. That keeps the market cap at 1 trillion. Now, people who are really bullish on Tesla, they think like this is gonna be the 3 trillion or a $4 trillion market cap company one day. This is your wave count. If that's what you believe, that this guy vision, that what you have, think that Elon Musk is that I'm gonna bet on his vision, his future growth of Tesla, this and this. Okay, that the Tesla will be the one of the top most valuable company in the world, meaning that it will overtake Apple, Microsoft, and Nvidia one day. If you believe that, okay, this is your technical. This will make the case for that 2 trillion, 3 trillion plus market cap. If you think that the Tesla will struggle, now, meaning that sales not going to pick up, fundamental will stay, they will improve eventually, as like like it's just the demand is just, Europe numbers are down here, like, it's just Tesla craze is like, is good, but now on top of it is like when they're gonna pass this bill, it doesn't have the 7,500 tax credit. So that is gonna throw a lot of people off as well. Keep that thing in mind because people buying Tesla right now because they can take advantage of the 7,500 tax credit. Well, you're not getting it after the bill if the bill get passed. So that's why he's fighting with him as well. It's like, what the hell? It's gonna affect my sales. So it's just, again, it's a wild stock. Okay, fundamental has to make sense. I mean, some just never do. So if you just wants to simply put a price tag of a 500 to a 600 to a 700, that's a pretty reasonable target. This is the wave count for you. Okay, so this is a very like the Elliott wave rule applies both ways. It's just a matter of like where you want to anchor this fourth wave, either here, and then you look for 333 subdivisions, three here, three up. This is going to be another ABC. But you have to understand one thing, that the price from the low, okay, is making higher highs and higher lows. You keep that thing in mind though. If you look at the price on a bigger time frame, the price is making higher highs and higher lows. It's not doing this, as as you see this. This is a higher low swing. This is your low. This is your high. This is your higher low. This is your higher high. You see that this dip right there needs to stay above this swing low. This is another higher low. So basically now it has to make another higher high, meaning to take out this high. So technically the stock has the bullish look. There's no doubt. Okay. But but it's just a wild stock. But people who don't want to trade Tesla, but they want to trade Tesla, because it's the one that's going to pay you the quickest reward on a trade if you're right. But it's very choppy what Tesla has been doing for so many years, you know? It just makes it very difficult to, I mean, if you just remove everything, if you simply take two distribution phases in the market, this is your accumulation phase, this is your massive distribution phase, that's the accumulation back up to the upside. But now the thing is this, one bar is 1 week. People don't have the stomach to hold trade. They panic the next day or 3 days from now, like my position is down. Sure, that's it. End of the world now. It's just massive. Tesla has such a wild run, you know, from this 13, 14 bucks all the way back here. It's just, I mean, it just I just went sideways and it just with his Twitter purchase here and then you know, finally after grind it for like years, it finally made a new high. So the price, technically looking at the price is fine. It's just a matter of making a case here. So regardless, the thing is this, that if the stock can make this move to complete that diagonal, it still has a plenty of upside. 468 to basically 488 for now, and then 488 down to 490, So you have this much room to the upside here, or going from this, you really want to make a bullish case, Tesla story will turn around in the coming months, earnings will improve. You can make the case of this one. So regardless, whichever way you look at them, either you look at it here as a third wave, either you look here as a C wave, the wave count resolves higher. Okay. Now I'm gonna go back to this part where you're gonna have one, two, three, this. Oh yeah, this gonna keep you up at nighttime. So it's all depends on your time frame. You're fighting a 1 hour wave count here versus if you really want to get a better clean look, you just focus on a bigger time frame. Elliott is going to work much better, 10 times better on a bigger time frame than a smaller time frame miss that you keep moving around, especially these. I don't understand most people even why they even labeling this micro, subminute, and minute waves anyways when you hardly have any experience how to even label these. Don't do it. They're very tricky labeling. See, just as soon as you're gonna move, you see how quick your upside will change? Look at that. It's very difficult to to fight these smaller waves. So your best chance, your best bet is just stay in this minor way, this minor, intermediate, primary. That's it. Simple. You don't need to sit and break these. This is a very the 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 smaller waves, each one by one. Okay, this is a very detailed Elliott work, you know? It's gonna take you not few weeks or months, it'll take you several years, okay, of practice on real live trades over and over again for you to fully understand how these smaller subminute and microwaves work. These minor and this minute and subminute and microwaves works. They're very challenging. And don't waste your time on this one. Just very I've done this for so many years. I have a lot of practice. I don't even have to label, I can just visual the chart. But but I break them. Basically, I decompose every single wave because I want to know which wave ends where. Because this way it keeps the wave count in the right look as well. You know that you will because you're each wave respecting, meaning that your one smaller wave is respecting your one higher degree, just to make sure that one is not getting bigger and smaller than the other. So just by the look point of view, I just do it. I really don't have to decompose these smaller waves. Just keep it simple. Here's your wave one, here's your wave two. All you have to run is three versus one. That's it. Three versus one, 135, three versus one, 200%, 144. This is your target. This is your textbook print. How you get there, none of your business. It's as simple as this. Okay, here's your 100%. That satisfies as a wave three, 161.8, and 200%. And then the next one is 261.8, right there. This is how far the third wave can go. 100 to 161, 200 to 261.8. Where it will end, you don't know. Neither do I. It can stop here, it can stop here, it can stop, it can stop anywhere. And then you have this wave four, and then you have this wave five. Now, if you're gonna get yourself here, like, okay, well, here's a third wave, fine, reaches almost 200%. See, I told you in the video. Um, and now you're gonna decompose this. This is you see, like you constantly moving, like which is where. Look how much. Oops, look how it works. You're really gonna sit with the risk on the board to do all this every single day. And if you sit in and changing a wave count every single day, that's not Elliott anyways. You want to do this. I just want to show you the whole wave count. This is how it works. Look, decompose this. Well, I have the fancy software. So then you have another three here. Then you have another three here. It's just a bunch of threes. That's your complete wave count. And now if you're gonna get yourself into the smaller ones, is to see like, okay, now I wanted to decompose these waves. There you can do those ones as well. This is not easy. It looks very easy. I just did it for you, right? Yeah, sit and count on your software. We'll see what you will come up to the upside. I'd like to see that. It's expensive software. I mean, it makes your job easier. But you can't do this thing on Trading View or something. Neither do I can do this thing on Optima. So only on this software. So in this case, so you see like see this like this diagonal? I'm telling you, it's the same thing here with the cues that we just looked at them. I posted this thing yesterday as well. I was like, NVIDIA looks like pretty much the same as cues, you know? So we could do the same again, the other way we can do the same thing as well. Put a three up here, and then this four the this three here, and then this smaller way four, and then five. Same thing we did this one with the cues. This. So in this case right there with NVIDIA, it does the same thing, meaning they're putting a four. I'm not going to change it now, but you can get my point. Four here, and then look for this fifth wave to get to this three versus one. The three versus one of NVIDIA is at 150, you know? So it's back. It is just sitting right this 200%. This. Remember, I always talk about this 200. You're not gonna break this right away. It's a very strong fib. You see, like it gives you a bit of a hope. Every time and if I show you a wave, if I will ever show you a wave count where you see this 200%, yeah, watch this print really close because this is where you gonna take a pause. I just we don't know that, but we'll see what happens. But you don't just slice through it. Let's put it this way. Now this comes after 161.8. The same thing when those futures and stuff, when I run those highs and low swings, it has that 200%. Yeah, just watch that 200%. That's it. I just scaled there was a quick trade in and out, like couple the futures were down like what 700 points or so, and it was like what 59.38 was the 200% fib. And I wrote that thing. I was like, okay, I'm bidding on 59.40 entry. I just don't. Sometimes you go off the low point, 1 or 2 points. It really doesn't make a big difference. So I was just sitting on the couch, and my wife was sitting right next to me. She was on the phone. Um, and the order triggered. So I put 5 contracts in there. I was like, okay, fine. I mean, worst case is it can poke down another couple more points, but I don't think you're gonna break 200 that easily. It's gonna bounce. So I was just looking for that 14, 15 point bounce from that 200. Yeah, it just hit like what 59.37, I believe. Order got filled at 59.40 and exit 14 or 15 points to the upside. It lasted like, I don't know, 3, 4 minutes. I got out of the trade. And then I was like, here, it was 1,200 bucks. She's like, you just made it? I was like, yeah. She's like, just now? I was like, yeah. She's like, you're crazy. I was like, oh, no, I don't know. She's like, how did you even do that? I was like, well, I have those marked levels. I had this thing marked and order got filled. I put a bid on it. I'm just got out of the pop. He's like, wow, I'm gonna use something. Just again, there's like a quick scalping trade comes quick and you can take advantage of them. But the point is like the 200% fib is just you have to pay attention to this one. It's a very strong fib. Um, so we'll see what happens here. NVIDIA is definitely near the 153, right? The 150, 143. What, sorry, 141. Yeah, it's like few points off. So if I don't have to do any of this, okay, this is what you should be doing. If you're new to Elliott, I highly recommend you, if you want to listen to me and do what I tell you, just do this. That's it. Here's your wave one, down in two, three versus one, 150. Now the question is that when the price gonna get there, you don't know that. Neither do I. As long as the market, the stock is trading fine, you know, and the market is good, NVIDIA is good, right? So is the fourth third ended here? Possible. This is the same case that I'm trying to make here. You see how similar, they're identical, same charts? The same charts, same wave count. This one already reached the three versus one. This one didn't. Neither did the S&P 500 cash did. It's just off by a few points. It was pretty close. 60.95 versus our high of 60.59. We're just getting right to this key textbook Elliott fib projection of a third wave by the near the all-time high. You need a strong catalyst from here to break the ceiling. So what it could be, that's what we're gonna have to think. And okay, well now we got the war going. These bombs are falling on our heads. You see, like it's just get it cool off. What else is left? Like what is that tariffs? I mean, I don't really think that market really gonna take tariffs positive. That's it. They just think it just show it enough strength or whatever the deals are coming. These are coming. Nobody know what the deal is, but it's coming. So, so now if we go back with 78.6 from this high to this low, and then we put our 100% to 7.2, it's 178. This will be a target for NVIDIA to the upside in the coming months. It's already trading above 78.6 anyways. It's just a matter of this fourth wave, this fourth, this fourth. That's what I'm saying. It's just I've looked at men like see when you in order to find weakness in the market, you need to find weakness in big names. Market does not roll over on a small market cap companies. Bigger market cap companies, the top leaders need to take a hit, is gonna roll over the index. Index is gonna roll over, especially the NDX is gonna pressure S&P 500. S&P 500 rolls over. That's when you have the overall weakness in the market. You cannot sit and just fight S&P 500. Oh, this is this, and this. The most important is tech. The weakness has to come from here. Okay, there's only two down. The rest of them are all up. If the swings are up, with does it consider a market weakness? Absolutely not. When these directions are gonna turn down, yes, now the index is gonna be under pressure. But look where they're sitting since last week. They're not even moving. I'm just like looking every day. I'm like, are they even moving? They're like all glued to each other, basically. They're very close. It's like lagging west, weakening west, weakening north, leading east, weakening northwest. You see, the ideal rotation is lagging, heading northeast. So we can run a scan here. I didn't even look at it yet. Lagging, heading northeast. We can do an S&P 500 last bar, execute. There you go. This scans the all 500 stocks. That's it. These are the 5 out of 500 stocks. Open RRG. There you go. These are the stocks in the entire S&P 500 has much better probability in the coming days or a week or two for the stocks to make a move because you're looking for that momentum and you're looking for that alpha. I bought a leap on UNP, remember? Because I ran a scan. I was like, this is an industrial stock. Industrial sector is pretty strong. So like this this is a 1-2 swing and a weekly as well, I believe it is. Daily. No, it's not a stock. Yeah, right there. So 1-2 swing here on a weekly time frame. I was like, let's try to see if we can the rotation plays out. Should get some upside on this industrial stock. So the rest of them are all just here. It's not that many, right? It's a five. I just ran a scan on the 500 stocks and only filtered this. The rest of them are all sitting here, up in here. They're sitting whatever the curve is, they're on. We can do another way is the one they are in there are a lot of them are. by one. Here, weakening. Okay, these are the ones. There you go. Wow. No, this is a file. 100. Can't 5. So it can't be two. Now these are the stocks. They get out of the leading diagonal. Sorry, leading diagonal. Leading quadrant to a weakening. Now they're turning back up again. There you go. You see the rotation goes up. That these are the ones that form the hook back again toward the leading quadrant. And these are the ones. So meaning that, well, Microsoft is one of them. Like this stock right there. You see, got this upside, and now it's just the momentum is pretty strong. On this on this stock. Look at this. There's your CF all-time high. Industries are just it's too close. I don't like HP is just too close. But FLCR, this is something to keep an eye on. Showing a pretty good good momentum, but I don't know. This First Solar is just it's recovering definitely for sure. Oh, this is a five. This stock can break this. It can, but this is the bet that you're willing to make. If the momentum stays strong and if this becomes a failed swing in five, this is gonna become one. And this stock can easily rebound. It goes into a one. Because right now the stock is making lower highs and lower lows. You see lower high, because it stays below this swing, uh, previous swing too. And now I made it here. It made it up here. Now this five is supposed to take out this low, but didn't. Stopped here. Now it's trying to make a reversal. So if we can just make a, if the momentum is good, I don't know. I mean, just I felt so 198 is the breakout level. So there's not that many. That's what I'm saying. It's just kind of MSTR chopping around. It's just two sideways price action. Not not really doing much. See, there's nothing you can do. Just to wait. But the overall, I mean, it looks good. Rotation's trying to form. You see, this is just you have a clear five waves up, wave two, and then we're just gonna look for this 1, 2, then third to the upside. If you look at the rotation here, you can just add here. See, looking pretty good. So MSTR made something to, I mean, we already have it. I'm not gonna let me keep adding to the same position. I want to find something else. I bought shares of this one, and then on top of it, I got that Misty. Like, just do it enough, you know. You collect dividend on one side, and then and then you have the upside in Misty as well. We can take advantage on that on that one. On top of it, we have MSTR. So, how much more you want to put into it? I mean, we can go back here, here. It's the same. See, wave one, two, and now just try to see if we could take out this 2530. The minimum meaning the measured move is 2965. So that's from this low to this high projected from 20.04, equal distance will be 2965 as long as this low holds. And then what if I'm going to become down? Then it's going to drop, you see? So the upside projection will change. It will stay as is for now as long as this low holds. So there you go. So I have them both. I mean, if you're really thinking like I want to buy some options and leaps, this and that, I mean, it's just your call, but it's just a matter of like how much risk you want to really put into a position. I spread them out with two ways. One, I could take advantage on the dividend side, along if I can get some upside at the same time. That could benefit me on the Misty, but on the same time, just hold the MSDR and that's it, and just let this thing work over time. I'm not selling this thing anytime soon, anyway. So just um, you asked me about Broadcom. Broadcom is starting to show some sort of this fourth wave. Okay, so it's gonna change because of the weekend. I hit. Yeah, look at this. This is what you call textbook, Brett. Three versus one. 264.68. High was 264.89. I'm telling you, there are some stocks that I have labeled over the years. There's plenty more as well. I cannot think of every single one of them. It just works really good with fibs, you know? Just really gives you targets to the penny. So this is a three versus one, and now it has starting to take a bit of a breather in this wave four before it's make one more push to the upside in this wave five. So it had their earnings, just, you know, it's just sitting kind of circling around this 250 area since the earnings. So if this is a wave four, four versus three, 23.6 to the 235, 100% will be 228. So your first ideal zone is what you're gonna be watching is this. Okay. So that would be, I don't even know if this is gonna be an ABC or not. Who knows? What is gonna be? That just, as I said before, if you're new to Elliott, this is all you need to label. Nothing else. Do not sit and count these. Okay, this is a clean, simple Elliott wave. Okay, please, slightly shorter. This is all you have to do. Okay, you don't need to to do what I do right here. You can watch, but there's no point for you to break these smaller waves. It's just don't do it. Not ready yet. keep it simple, you will make much better decisions, and you're gonna if you will have enough time as and you're gonna manage your risk well along with entries and things like this. Like if you're gonna get like you have pretty well when you have a stock that respect fibs is the one that you should be like more focused on, especially stock like this, like big companies. Like these ones are literally gives you excellent fills. Like look at this 50% retracement, three versus one. Like now you have a potential like okay, the stock it might be because it has such a huge run. Okay, you're talking like okay, this is the counter trend move. 63, 64% upside. 64% from wave two to wave three. From the low, 91.81. Are you kidding me? Yeah, we don't know that. First of all, none of us will know that the stock will rally this much, but that's just not the point. The point is that the stock you can see up to three versus one has a pretty big run, right? So now the question is like, okay, if this is not the third, if you still think this is still an ongoing third, so what will be the next 200, 297? So how do you adjust or justify like, okay, where I am and what I can expect and what I should trade, you know? Well, first, you have to look at this way that a stock has reached a textbook print of 161.8. It has the probability that the stock can make a move back to the 200%. That's another. Or it can just move back up and then comes back down. It's very hard to know where the upside will come into an end. When it comes to the bottom, it's much easier to find entry in the bottom. We always remember that. Okay, it's much better to find mean reversion. You can find much better buy signals. Okay, but it's not easy. The timing doesn't really work when it comes to like, okay, here, look, let's do this. Look at this. So if I run this wave one, wave two, three, the 161.8, look at the timing here. It's supposed to reach on April 28. This. It just never, it doesn't work. And then it got there when. Look at the difference on timing of 161.8 with 161. It's a time relationship. Just I know it's never gonna work. But when it comes to the downside, yeah, you can come pretty damn close. You can just build that's your time zone. So the first one is well, this one is gonna confuse you. This is you're not gonna. I hate to show this to be honest because none of you guys are ready yet. Okay, it's just I'll show you one time. Okay. This is 6 1.8. This is 6 1.8. This is time. This is price. Okay. When the price is gonna come down, as you see right there, okay, the price was 241.11 on June 9th at 8 o'clock. So your price relationship with the fib met, but not the time. It's either or. Okay. There's a lot of time that you can click both of them at the same time. But that happens really rare. I mean, I've done it many times. I happen to pick some good entry. It's just the hourly bar open with the price and time at the same time, and you just go long. I mean, it's just luck of a draw, to be honest. But then when you look at the whole time, this is price, and then the June 11:30 is when the time run its course. It's either a price or either a time. So it's going to be close. Okay. So it's just a matter of, it's a 1 hour chart. So see the price came back here, 241, bounced back up. So it just trying to kill that time because price was already met. It just the just price just has to buy some time. It has to run its course. That's how it works. It's either or. It cannot be both at the same time. But in Tesla, some Nvidia, like some of these stocks, they do well respect their time relationship with fibs as well, pretty good. So you can definitely see, for the point is like for the bottoms, for the entry point of view. So price point of view, so you get into a trade, let's say at June 9th, you're in a trade for 2 days. Is it a really that big of a deal? Not really. So if you, let's say, pick an entry here, you still get the reward, right? Just from the bounce from the fib. But you still have to think this like, okay, fine, that the price is showing you the initial bounce from the fib support, but your time is not ended yet. So don't expect the high yet until it runs its course to complete that time. That's how the fib and time relationship works. Okay. Now this is advanced stuff. This is not something that you're gonna sit and you're gonna figure it out on your own anytime soon. You need to have the right wave count, first of all, in order to make this thing work. This is very advanced Elliott. I used to do all just I just like now rest of them are in the same way. Now if you want to run this thing into 100%, so you can just do the same thing as well. My 100 here is your 100%. The 100% will pair with this one. Now in this case, we can see the time is approaching, not the price. You see? Either or. So just the point is like now from here, we're gonna see like, okay, well, we met the time and price of this. Now we're gonna see if this is really a fourth wave, which is going to start to pair with this wave two, We have June 16th at 10 o'clock is where the time will meet this 228%, 228 price, but not the price, but the time is. Now, there's gonna be another, hang on. Yeah, this is the 23.6. You're just making a case here for a fourth wave. Now, this fourth wave, if the third ended here, so the basically instead of fighting these relationships, like the best way to do this, you really don't have to fight this third wave. Run the This is your ideal fourth wave, okay, right there. If this is a third wave ended here, I'm gonna just make it simple. I don't want to show you too complicated stuff. It's gonna go over your head anyways. Just go like this. From June 16th until June 24, leave it like this. And you wait. That's your zone. So in this case right there, neither does the 23.6 or 38.2 has reached the time or price. Okay? So you just wait and see what happens. Once the price gets in here, okay, that means that the price has tested the 23.6, and then you have to wait until this box time completes. Once you see if the price time to come out, that's when you go long. And so never, you never, again, you never, nobody's gonna have the perfect entry every single time, but there's some of them you're gonna nail them really good. I've done them, I mean, many times, like you can pick an entry and stock moves right away. How many times it happens? But not, it happens, but it doesn't happen every single time, right? Some are just you enter a trade. I take multiple, like take a signal fire, like okay, I act thinking like okay, RG looks good, signal is good, signal looks good, giving me an option. So like, hey, go long, don't think, I'm willing to take a risk. That's how I would say like, okay, fine, let's start something. Let's see how it goes. Not just blindly buying stuff. And I have fibs. Fibs that will see where we can find the floor. So what else? Um, S&P of 1.62% year to date. Healthcare down 1%. Consumer discretion, actually down 5 is a war sector right now. That includes Amazon and Tesla. They're the top leader, the top two of XLY. Here I'm going to show you one thing. I'm going to clean this thing up and see better. There's an S&P, Qs, diamonds, and Russell 2000. What do you see here? This is a yearly bar for the whole year, and we still got another year, like halfway to go. Okay. Look what's going on in the market. And what are you going to expect for the next 6 weeks, 6 months as well? Now listen really good. We have an S&P 500 for the year to date. Sorry, for right now sitting at a 1.5%. S&P 500 has a higher yearly bar. So does the Qs. Not the IWM, not this. For the entire year, this bar will remain red. It will never turn green anymore. Just for you to just let you know. Same thing here. It's just not going to turn green anymore. The flush out in March, February, March, it took out this last year low. It can only engulf, meaning that this bar can turn like this. It will never go green. It's a lower bar. These ones right there, they're turning into a doji now. Okay. This one has a double top. This one is pretty close by 47 points to call a double top. This is a double top. Nothing here. The reason that I am telling you about making a case for a double digit growth just doesn't add up. It's what I previously said before. If I have to make a call off a market in the next 6 months, it will be less than 5% year to date. You're gonna have no help coming much from the value and from the small caps in the market. They're just recovering. It's very kind of like look how close it was, close to last year low. This bar would have turned red. So then it would be all four would be matching, but that's just not the case. You still have the and now the thing is this that these were matching, and except for this, we just I it just it's not gonna. I mean, fine, the price is pretty much covering back to the same, but it just makes it very hard to match a wave count side by side on indexes when you have different lows and different highs, because your upside projections will change. So it just has to match. That's all. It's going to be much easier when the swing matches with your wave count. That's how I make the case. It just, I know I'm like, everybody will tell me, Mo, it's too early to look at the yearly bar right now because we're not even, we didn't even end the year, which is fine, but I can still make the case of what the hell is going on the rest of the market. You know, this is the third year up on a time, one, two, and three. One, two, and three. This is only one. See, the lower bar doesn't count. This is a mess. And I believe longer and longer these rates are staying in, like the higher the rates are, this sucker is not going anywhere. This is the fourth year. It has a double top, as you can see right there, almost to the penny right there. 244.46, which is a 2021 high, and 2024, which is a last year high, was 224. You see how cute prints they are? These are. Talk about market that is very well controlled. There you go. Look at that. It's just a matter of like taking out this double top. Is it gonna break? Yes, it will. How long is it gonna take? Well, the rates has to come down because none of these small caps is gonna can can do much on higher rates. But making a case for the next 6 months, looking at two the these four side by side, they just top two are up, bottom twos are down. I mean, it doesn't mean that the bar cannot engulf. It will, but it's gonna have a very limited upside. Engulfing bars don't get huge upside. Just to let you know, never did. It just here we have engulfing bar here. Look, it took out a low, ripped back up. The previous high was 366. High was 369. That's it. I know engulf. Once you made a low, take out the previous year low, and then you swing, and then the price engulf. You're just not gonna have. You cannot make the case all the way up here. No engulfing bar is gonna rip that hard. Engulfing bars are they're indecision bars. They engulf. We might have a crazy year. I mean, we're talking about this year being crazy. We might have a wild year next year. But if we look at them, look at this entire picture here first. Since 2009, I'm talking about Dow Jones Industrial. From 2009, this is the first year in 2025 it has put a lower bar. Now there's not a single red bar here for the year, as you can see right in front of you. So one single bar right there, one lower bar. And now we're fighting and thinking that this thing will engulf. Okay, look at this 180, 183. It, there is, oh, there you go. There is just the lower bar, but you see, this thing is like, let's just look at the bigger picture. Okay, it is much better to look at a bigger picture and then you try to paint the smaller picture. It's never the other way around. You know, 2015, no, 2015 is and this is the outside bar. This is the outside bar. This is the outside bar. There's four bars. Okay. Green is a higher bar. Can you just write this thing down? Because I'm really there. Higher bar is green. Lower bar is red. outside bar, which is the called engulfing bar candle, is blue. Inside is black. That's all you have to remember. Nothing else. You want to go up, you need green bars. You're coming down, you need red bars. When the bar turns engulf, you have to watch the next bar really careful because you don't know which way it's going to open. On a trend, when you have pricing that trading above the moving averages, swing is up, trade the price is trading above the Ichimoku cloud, or whatever the case is, if the trend is up, you will look for upside bars, meaning that you expect a green bars. Same thing with the lower part. When the lower bars, when the price is under pressure, it's going to print lower bars. Outside bars are the engulfing bars that engulf, that takes out the previous low and it takes out the previous high of the candle. It engulfs. Inside bars are the indecision bars that stays in between. They didn't take out the previous low and the high. It just sits in the middle. So you ignore those. That's it. Those are just the worst bars to trade. Gann said the same thing. Those are just bars that you just ignore. Outside bars, he says, is the ones that you have to watch them. Those are the ones that a lot of times has formed the top of the market. Gann analysis has the what he says that the when the trend goes up, it ends with an outside bar. When the trend goes down, it ends with the outside bar. That's what his main indication is like. This is the sign for a bottom and the top. And there's a lot of time that has happened. I can show you a lot of charts there the price has the swing went up, 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 and up, ended up putting up on an outside reversal up on the very top, and then the price just dropped. That's his analysis. But that's not but it's not every single time, but it can. But that's the bar that you look for. It's just what most people call as a bearish engulfing bar candle. That's what that means up on the top. Okay. So this is the thing. So we have how many years that we just went up, right? And we finally in 2025 we put a one lower yearly bar. That doesn't mean that the higher longer term swings are the years that this down. The swing is up, but that's just going to take you 3 years of lower lows for the swing to turn back down. It tried it here twice, 2 years in a row, but not the third year. So you got one here, two here, but you need another three here, but that didn't happen. So you just 1, 2, 3, and they just keep going up and up and up. So this is this. This one has a history. First of all, is not as old as Dow Jones. You'd say like history just goes up to like 2000. So from here, this this pig right there has a history of lower bars. This is already lower for this year. Say in 2023, 2024, 2022. Now this one has a double top. It just now if you look at the price of this one is just that's the case. But now keep in mind that you're looking at a very long time frame because it's just 1 year. It's not me. This thing hasn't even finished yet. The thing is this is the bet that you're willing to make, okay? Where 208 to the highs is 17%. So you telling me that if we engulf in the next 6 months, we're gonna take out this high, and we're gonna turn a bar like this, which has such a limited upside, okay, on an engulfing bar, okay. These are very limited upside. I know that. You don't, this was COVID. Um, it just, it's what I'm just trying to sit and analyze the whole market is to see what to make out of this year. It's just, I mean, I'm not saying that the market is not going to make a new high. It will, but it's just, it will back off by the time it's going to close the year. Where we'll close it? Well, I don't know that. Now let's look at this S&P. Now we just looked at Dow. Here's an S&P. S&P doesn't have a single lower yearly bar. Dow did this year, but not the S&P. You see how confusing this picture is now? So now let's say if this market closes flat for the year where we are. I mean, it can go up, it can come down, whatever. Let's say if it ended the year with a doji. So we had a doji here. The last time we had a doji here, this was a volatile year with an outside bar. Okay. We had a doji here, then we had a pretty nice solid move to the upside. Yeah, you don't see dojis are very rare candles. Okay, we just only find two of them. Some of you are not even a trader with the chart that you're looking at. Well, like meaning that you're not even trading that long enough. And so now let's look at the Qs. I would do that NDX Qs. Not gonna make no, it's not gonna pick up that. Look at Qs. Qs had one here. I would do let's just do a SPY here. ETF to ETF. Look, this was a lower bar in 2022 when SPY and Gulf. The rest is all same, except for this one as well. The SPY here in 2020 had an engulfing bar. A 2020 right there was just a straight clear shot to the upside. As long as you're making higher highs, you're good because you've taken out the previous year high. And like this year we did here. We did it here. We didn't do it here. We didn't not this and this. Now if we just run our fib, let's say from high to low, look at this, 229. Look at the high here, 230.70, it just backed off. You're not gonna break 78.6 on a lower bar. Absolutely not. Simple as that. 78.6 on a lower bar is gonna stop the price. I'll put anything on a line. That's what I'm saying. The 7 8 points is gonna break. It's gonna turn the bar into an engulfing bar. I'll show you this way. You take the previous sorry, bottom. Take the bottom of this year, project it to the last year high. So that's your 7 8.6 right there. So when you have a lower bar, when the price goes right back and hit this mark, this fib, which is always going to be a last resort, because you know first that bar is already lower. It's not turning green at all. Out of the equation. Because I has already made a no. Low has been recorded. It has only 10% probability now for this part to turn like this blue, meaning that it could engulf. If the only time that it will engulf, it needs to break out this high, which is 244.98. Then it can make a move, a bit of a room to the upside. That's it. It has already made a pretty deep low. And just that's it. Once it turns blue, that's it. Then it's not turning green or red or black anymore. I'm just gonna just end the year with blue bar, which is the outside bar. Whatever this market has the upside for this year left, it's gonna be a very limited upside. That's how I see it. I can be wrong. I mean, you cannot, I don't know how much this can run. It could help this. It's not gonna help this much. These two, okay, these suckers already put up cause damage. Because the flush out that happened this year, that was damn close. I was watching. It's like, look at this. It doesn't mean that you cannot reverse back to the upside. Of course you can, but it's gonna kill the upside for you. That's all. You it's very the once you have a lower bar, it's a very difficult and hard to fight the upside and trying to make a very bull call. Let's put it this way. It's a lot much easier to make a bull call on a higher bar because you can simply project the upside with fibs. You can run those fib extensions. They could give you a certain, the fib prints or the upside. Like, okay, these are my projections. The price, as long as the price has it already has a higher bar, it has a probability that it will go and reach that fib target. That's it. It's not easy to because I know this is gonna stay red. I know that. So it's just a matter of now it's gonna turn into another blue bar. So when we ever gonna see how one of the last year lows gonna get taken out? You have to ask yourself that question. Never had one. Q's did. Diamonds has it. IWM has it. Neither, but not the SPY. SPY didn't even had a one single lower yearly bar since 2010. So it's been what, 15 years now? The 15 years, the price has been making higher highs every single year. Every single year, we had a new high in the last 15 years. These are all new, these are all highs. I mean, I hate to say it, but one of these years, I think we're gonna have this. The market's gonna hit hard. I don't know when, and it's gonna happen in his terms. Because what I noticed here, you see, is number five down, 5 and 6 engulfing bar. We haven't reached that 5 and 6 mark again. This is the time running here on the top. So I made a same case here by buying puts. If you, I don't know how much did you cash. I made 360 bucks. I made a same thing here. I had 8 contracts on the SPY puts that I put, but I'm gonna keep the the 6,059.90 the put spread on that on the SPX. Again, we'll see how that one works out. It's the same thing here. The reason why I bought puts is this: 5 with this sell signal, 5 outside bar. But I've no. That's what I said. Like, no, sorry, not this one. 5 here, outside bar. Yeah, what I notice is every time when you get this up to 5 and 6, your next bar is a lower bar, meaning that it takes out the previous day or week and month low. That's what I've noticed. And this sell signal that I have, that when it triggers on the bar, the next bar must be a lower bar. It could be an inside bar like this. You see, it triggered here, inside, meaning that no new low the next day, chopped around all day, lower bar. Same thing here. Signal triggered here, inside day, lower bar. Signal triggered here, lower bar. Your next bar must be a lower bar. It could be an inside bar that doesn't, I mean, it's a neutral bar. The next one must be a lower bar. That's the only way your signal is going to play out. But that doesn't trigger that often, as you can see that. Same thing here. Outside bar, sell signal, inside day, lower bar. Sell signal, lower bar. Sell signal, inside day, lower bar. Well, this sucker works. I don't, doesn't mean that, see, sell signal, lower bar. You need a lower bar, okay, the next day. Well, how much low? Well, we don't know that. Nobody knows. But we just, when the day opens, we can project the downside. But if the signal triggers on this bar and the next bar goes up, it's not valid. But it has a very good, but it doesn't trigger that often either, as you see. You know? Now, how much is the price can go down? We don't know that. I mean, if this triggers here on this day, okay, we made it up here to the 1 standard deviation move. Well, again, how long is it going to go down? Well, we don't know that. We're going to find out. We'll see how the future opens, and how the cash session goes. Now, if you look at them here, the the buy ones, they work good on indexes. It's right here. Buy signal triggered on a lower bar. Next bar is a higher bar. Buy signal triggered hit on a lower bar. Next bar is a higher bar. It works good. But doesn't but this, once it triggers, there's nothing in here for a very long time. You know? So they're very good. I mean, again, we're looking at a probability game here. They're very good entries that we can consider. I mean, here's mine, mean reversion, and here's the buy signal at the same time on the same bar. So 100% confirmed buy. Nothing here. I mean, there's several mean reversion signal triggered here. They all failed. Except for this one, kind of gives you a bit of an upside, but not the buy signal one along with this. I think that's one of the most powerful signal right there. Mean reversion and the buy signal at the same time on this day, on this bar. Price has not seen that low ever since. And another one triggered here. I'm always testing, like, the buy is good, but then to find a good sell signal is look at this one on the weekly time frame. Triggered here on this week, lower bar. Triggered on this week, lower week. Triggered on this one, lower week. Very like choppy. Then you got the real good flush down. So they just work the same way to the sell, same thing. See, triggered here on this week. Next week was a lower week. Nothing here for a long time. Here you go. Look. This thing can literally pick tops lower week. It's crazy. Not this one. This one failed. Um, it made a low, but it engulfed. You see, like it triggered here. They had an inside week, and then you had the engulfing week right there. It engulfed, and another one. Yeah, that's a very, very choppy one for sure. Look at this. Engulfing bar, lower week. Engulfing bar, lower week. It's a pace. It's a very strong sell signal, if you ask me. Very strong. Seen a lot of good results. I mean, I'm starting using them. That's what I bought puts just because of this. I don't just imagine anything like, yeah, I just want to buy puts. It's like, let's take a shot. Who cares? What's the worst case? We chopped around the next day. I was like, okay, fine. It's not a lower bar. It's still an inside. So, okay, we're just going to wait for the next one. And then there you go. So next time we're going to find it's not a very long, like, I don't know. I mean, I'm just because there's not that many. And now I'm just want to see like, okay, well, when the next buy signal is going to trigger. So we're going to watch for those. So if we run, let's say, let's do S&P 500 last bar. You can do a week. I like bigger time frame. Gives you last week. Uh, 64 stocks has triggered a trigger this buy signal on a weekly time frame. Let's take a look. See, just made this watch list and watch tiles so damn close. I'm always clicking on these tiles. You click on tiles, it pops like this. Look at that. That becomes all tiles now. Always because gotta I'm gonna tell the guys like move this thing up a little bit. Open watch list. Okay, there you go. Oh, got a little ducky. Half look. Now these ones are the ones that triggered a buy signal here this week close on the weekly bar. So next week, what we're looking for is for a higher bar to take out the previous swing, the high of this week. Change this thing here. So what we're looking for now is bar labels. Do the there you go. So now what we're looking for is we're looking for a higher bar next week. So we have 5 days. Okay. To take out the to 103.59. So that's the trade on all of these stocks for the next week. Well, I can't trade all of them, but this one doesn't show. Oh, some of them are. Some of them doesn't show. How the scanner worked on this one? Showing the previous week. No, this is not right. See, some of them are not even showing. Yeah, this stupid bleach. Very good one. Yeah, something I need to do. It doesn't last. Oh, okay. Because I need to select the time. That's like something is not right. Okay, let's see. There you go. That should work. Now this is a weekly time frame. Okay. Yeah. See, now they're gonna match. Because I don't have this one. Something is not right here. See, now they all triggered at the close. There you go. See, now they're gonna, because I had to change because I didn't select the time here. It was a day, and I was trying to hit it last week. Okay, select the 1 week. Okay, that's good. So these are the ones. We have a Coinbase here on a weekly time frame. So we can definitely consider a coin trade for next week. Um, take this. Now we take the high, mark the low. So it has this. When was the last time it triggered here? On this bar, inside week. Then we had a higher bar. Huge reversal. This was the on the house. You see, that's what I said about the his all the Gann swings the count the swing ends with the outside bar, so not every time like here it happens, but you still puking. But this bar right there puts a lot of time. It puts the top and bottom. So yeah, coin have what else is there? Adobe. Wow. Adobe's gonna have an inside week. You're not gonna rip that thing back up. That was nasty, man. Seriously, I was so disappointed. I was like, are you serious? You know, it was, we had a price after report. It hit 446 to the penny. I had three targets here. And the 383. I was like, are you serious? Like, I had this fourth here. I was like, it's a three-way move anyways. I was like, it will get a push. Needs to break this 422. Then I ran some upside projections here and I was like, okay, fine, stock popped really good and boom, this and that. And you can't even see anything because it was all after hours. The Thinkorswim shows you a 446 print. That was the high when they report earnings. And then then market sold off on top of it. I was like, well, there you go. I was trying to even hold at least 400 and all the way down to five. Like, just what it is, what it is. What can we do? Very disappointed. And yes, and you have such a well-defined target to the upside, then it just doesn't pay you anything. Yeah, this one, if this is a fourth against, it just looks okay. If this fourth can manage to buy some time, whatever it is, a WXY, whichever way you want to do it, doesn't matter. It should just get one more push here, unless this is a truncation, that's a different case. But truncation usually don't move around like this. Truncation usually makes a pretty sharp reversal pretty quick. So I wouldn't go with the reason why I'm saying it is like ending the wave count like this. One, two, three, four, and five make this thing as a truncated wave. And then you just kind of look for a wave two, and then you make the case for the third. But this price action here doesn't normally happen. The truncations are like this. You're gonna get a sharp reversal like this. See? Boom. The same thing happens on the top as well. Every time on that you have a trunk, it's very rare for a truncation. But when the truncation happens, when the fifth waves really doesn't, makes a lower low, you're just gonna get a sharp reversal back to the upside. And when you have them to the upside, and you just get the same thing to the downside. These are the sharp moves that we will experience in trading. Truncation and ending diagonals. Not the leading diagonal, ending diagonals are a pretty sharp reversal to the downside. Just few names, Aflac, See, this I wanted to. I'm interested in this stock. I'm just CDW. I've been watching and we got another lower weekly bar. Plus the swing turned down as well. See, the swing good to know the directions. Oh boy. It's good to know the direction because only three of them has a swing up. Rest of all this. Wow, these are all swings that are down on a weekly basis. Yeah, of course, there's 4 weeks of lower lows. There's three right there that's starting to swing down. One, two, three. This one's got a hold because it only has two. One more down here. Jeez. One more down. It's gonna turn the swing down. You need three bars. Three lower bars will turn the swing down or will turn the swing up. Packaging card. I think, wow. Jeez, man. Talk about buying a dip. Look at this. Globe Life. What is it, insurance company or something? Damn, it took a nasty dive here this year in April. From 131 down to 38 bucks. That's almost 100-point drop. It made a new all-time high. Wow. That's pretty impressive. How a stock can recover in a one single. Jeez, this is a 1 week. Wow. It's probably like what? The insurance company or something? Or Globe Life. Wow. It's pretty impressive. February 23 high down to April 12 low to April 4, 2025 all-time high. So this sucker just went from April 24 to April 25 back to the highs. 12 months. Interesting. 1920 is not a very huge ATR play. Say 19 to 23. That's like a, oh man, that's going to be a tough one. 1822. You just keep looking at like the weekly ranges, it kind of tells you like what is the expected move, how the stock has been trading. I mean, it's been chopping around. That's what it looks like. In a 3-4 point move. Impressive recovery, that's for sure. These these swings just turned out. Interested in this one. Okay, now which is the one that triggered a sell signal on a weekly time frame? It's only two stocks. Course diagnostic in this. In a daily time frame. Oh boy. Whoa, 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 whoa. Easy. 24 of them. triggered yesterday. So basically, this one is the next bar either has to be an inside bar for Monday, and then Tuesday it has to have a lower bar. Okay. So right now it has a higher bar. Doesn't mean last time it has a higher bar here. So look at the flush out. So if the price breaks above and makes a higher bar, then it means it's no valid. It's a pretty strong close for the stock though. Cardinal Health. No, see now the for Monday for Cardinal Health, you take out this high for the signal to work. 161.19 because you need a lower bar. See here, inside, lower. How much lower? Oh, we don't know that. But the target is this, to take out the low of the previous day. That's how it works. The high, it takes out the high, well, signal is no longer valid. But if you look at the previous ones, but that tells you like, okay, yes, can we expect the same thing inside and then lower, or just engulfing bar? So it doesn't. So some of them are just. I mean, it's a risk, I mean, it's just anything that could help all of us to make few bucks. I mean, that's what it is. But these are just like you just filter 500 stocks just down to 24. And because it meets all these conditions, all the conditions has to meet. There's five conditions and there's for this signal to trigger. It doesn't trigger anywhere else, right? Because it takes a long time. Oh, comes the baby oil. See, inside, over. Oh, this sucker is gonna close load for sure. Look how nasty that close was all the way at the lows. Mondelez, ugly close. Interesting. This one triggered as well. Well, if you have a higher open here, then it's not good. Oracle might have an inside week. Oracle is a ripping, man. Stock went crazy. 219 is the most. It's gonna take a pause right there. Yeah, it is a pretty strong stock. The 127 extension. I did a butterfly on this one, then I closed it. But I'm not following this stock for a few days. Oxy, some of these stocks are just ripping every day. Look how many days it's been. It has a higher bars, all green bars every day. Look at this one. Screwdriver, Phillips 66, 3, 6, 7 days. 7 days of higher highs. All higher bars would last 7 days in a row. See? Oh, let's see what happens. 121 is the print that needs to take out 121 on Monday. That's an ugly close right there. Walgreens. I think it's a good signal, man. We're gonna keep hunting for trades. Imports, I said. Look for a lower meaning the last day low. Then that's it. I try, I'm working on, like, I have it here. Okay, this is a SPY, right? 1 hour chart. See, on a 1 hour chart, watch this one. See, lower the time frame is, your signals will fail more often. Bigger the time frame is, much better signals on GAN. Now, if I do and 1 day, see, much clearer. See, low here, higher bar, low, higher bar. You see, this is a buy signal right there. And it's the same thing with a sell signal. Look at this buy signal. Now, if we go back to the weekly time frame, look at this. Talking about a top. Look at this. Look inside, lower, lower bar, lower bar. Look at this buy signal. We're gonna use it. Don't worry. That's why I just wanted to. I mean, I wrote a script. Then I back tested it a couple weeks, and I was like, okay, let's start taking trades now. Let's try to make something. Shit. I mean, something triggers. Boom. We just take the risk. And what happens? Happens. What happens? Take the damn risk. It's a good signal, though. I mean, I like it. Just I ran and looked through so many stocks and stuff, and it looks good. Okay, let's go to our list here. What we are trading. Apple. I'm sorry, Tesla. Did I have them here or remove them? Yeah, I never saw signal. Yeah. These colors are different. They're not lower higher, but these are this is the screen that I watch every day. This is these colors are these are custom colors. Custom colors are like when the swing is down, the bars will stay red. When the swing will turn direction to the upside, the bars will turn green. So I have, it's the same thing like what I have them as a background. See? So when the swing is down from here, all bars will stay red. When the swing turns up, the direction, it'll go green. Okay, then it stays green until the swing turns back down. So background, I like the background to be honest, but I just color them. Just custom the bars, that's all. Um Tesla has a weekly sell signal triggered here. That's what it was, the massive flush out, flush down right there. See? I didn't took that force. I saw this, to be honest, though and the week ended and it was a doji candle here. I was like, okay, fine. And then the next week Well, I didn't. Nobody knows that thing is gonna. They're gonna, have a cat and mouse fight. Um, but it was a really nice dive. Like, and we'll see. So Tesla is fine. Trading above, you see, trying to get all these closes above this 5 MA, the moving average. It's at 320. NVIDIA is fine. NVIDIA got a sell signal there, but it's very weak. But still got the lower bar. You see the last week low, just by pennies. You don't really. Mm, what do you make out of it? A 1 point move this big is just sideways, man. This is crazy. Yeah, I think the position. I'm gonna roll this position. I don't understand about this that you have a stock that is heading this way, but at the same time, when you look at a price, it's making. I don't understand why this stock is being so controlled all of a sudden. Oversold stock on the RSI. It's just fighting this. Well, it was around here. Like if you look at weekly time frame, I mean, stock is just side 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. Just completely sideways. It's over 2 months now. I mean, it has ranges that like it pops this and that, but it just doesn't have just sideways. That's all. It's an 11 swing on the 1 hour chart. That's what I'm just wondering, like, what the hell is going on here? You see, 5, 6, 7, higher and higher this swing is gonna get. It's gonna have a very high chance to make a pretty big move. I can tell you that. Now, for this swing to turn up, it needs to take out 204.50. Hope it happens next week. Because right now this is 11, now it's looking for 12, then looking for 13, then 14. The number, it just keep going up and up until it takes out the previous swing high. So it's 204 is the upside breakout. Very choppy sideways stock. Netflix swing is down. Those are the only two stocks right now has swing directions are down now. Netflix and Apple. Everything else is up. You see, like from the last 4 days this week. So because first of all, it put a lower weekly bar. Okay. So you had a lower weekly bar, and then from here you see this just every single day the stock is closing below the 5 MA now. So the band is red. Microsoft is strong. Microsoft had a ins the lower bar yesterday, but it's still close above the 5 MA. With all the beating the market took, Microsoft held like a champ yesterday. I think it's a new safe haven now. Oh, that's probably putting in a little bit of a top here. We'll see how the month is not ended yet. It's just starting to appear, but it has to close to confirm. See, Meta has a two down week, two down days now. Meta is on the verge for a swing, swing now because it's going to be 3 days. Google saved the day yesterday. See, two lower bars, and then yesterday has an engulfing bar. See, engulf made a low, and then yesterday it took out Thursday high of 176.72 as well. So put an engulfing bar, save the swing because three close below, swing will be down. Amazon did the same thing, engulfing bar. A lot of engulfing bars yesterday on Tesla, Amazon, Google, and Apple. They're all outside bars. This is the outside bar yesterday on Apple. So I have my finger crossed and see if this pig can just make this is a low. It could make a reversal back above 200 on Monday. Yeah, this is the outside bar. This is what I'm saying. It's this high right there, 237. That's the high of yesterday. I need to take out this 204. Where I was. Amazon, outside bar. AMD swing is down now. Outside bar, you see? Huge run. And ended up putting up an outside bar. Again, smacked her with a sell signal. Boom. Outside bars is, I mean, according to his, is like Qualcomm 2 days down, Broadcom down. Well, sell here, down bar yesterday, very slightly low. Yeah, I don't know if it's the fourth wave or not, but I don't know. Let's look at the wave count. I like this company too. I want to buy this one for sure. ASML is coming down in the second swing. I want to start buying this stock. I know it's expensive, but we can do some long dated spread just to cut the cost. At 200 EMA is 743. So it closed below 5. Standard deviation moves 753, 753, 740. There's a 10-point window. We'll see. Some of these weave ups here. I don't even know which one. Weave up 696 from the lows. Yeah, I'm gonna watch this one. I want to buy this dog ASML. MSTR triggered a buy signal yesterday at the close. That's the go signal here. That's in play as well. Coin. Nothing here. That triggered a weekly buy signal, not the daily. Right there. Zeus is fine. This tongue is like a beast, man. This is good. MDB just look at that full. It got a huge pop on earnings. Here's your 200 EMA. Got a strong risk. Look at this. Failed all the way back down. It almost filled the gap. Horrible. It's a buy signal here, but we don't know the Palantir right there. It is fight. Here's a pawn shop. Two down days. Well, one more down. Swing is gonna turn down. Costco. Costco swing is down. Sitting right at the VWAP now. Man, what's going on with this? Seriously, I hate this stock. You know, it's a 2 point stock. Is just, I'm not freaking ever trading this stock anymore, to be honest. Bullshit company. Such a low ATR play is just managed to manage this as 200 EMA, failed. There you go. Back to this EMA where it was before. Does you weave up. Here's your weave up from the low. Here's a weave up from the high. That's your 200 EMA. Where the stock you think is gonna go, man? It's just sitting in right in the middle. Horrible. Really like to see if this swing can make a move back up toward this 56. That's the that would be the ideal play. But these deep retracements are, we'll see. I'm gonna watch this. That's 7, 8.6. This stock got, I believe, 4 or 5 downgrades this week. McDonald's. I think every institute probably call each other, say like downgrade this stock because we have a short position on. How can you have a stock that can downgrade it by 4 or 5 different institute at the same week? Based on what? That's that's crazy. Just is fighting this 200 EMA right there is 300. Caterpillar is fine. GS 2 days down. JPM 2 days down. I'm telling you, it's Monday. There's a go signal trigger on Eli Lilly. Yeah. That's the only stock can move the healthcare, to be honest. No other stock can move healthcare without Eli Lilly. Merck. Merck has a potential. I've been watching. This is a monthly 1-2 swing. First of all, Merck didn't even had a single higher bar. The swing is down. It will take 3 more months. Is a 80 to 82 go signal triggered here. Stock swing is up on a daily, down monthly, weekly, and monthly. I mean, it took a 45% plunge from peak to trough. Inside month so far. XOM got a pretty big move. Yeah, that's pretty much about it. UNP is It's fine. Just wanna. What I'm looking for is this. I have a pretty. I have a good feeling that can happen. This is a P3. A P3 will turn into a false swing if it takes out this high, which is 231. Okay, so it's industrial stock. It's a go signal. So I'm about a very long dated leap. I'll let this thing work. Make a move back up. Rotation looks very, rotation looks really good. So better off. GLD almost back to the highs. Remember, I was trying to. I'm glad I didn't do it, to be honest. Something. I was gonna. I was looking to short gold. I mean, it can happen if this is gonna be a flat. You know. So, but this is the third that goes here. You fighting this 261.8, this 315 is just against from this 123. You see 261.8, this paper is not a joke. It backed it off, but then it just, oh, now we have a double top. Right. Ooh. Yeah, corrections are just not easy to trade and not easy to label, to be honest, just the way it is. It's exactly a double top to the penny. Oh, we got this stupid war going on. I mean, of course, gold is going to react. I'm going to stop this recording.